Okay, so we saw a great recovery yesterday from the lows of 50.6 cents up to the, what is that, 82.45 cents. That is a 62.94% move to the upside for Cardano's ADA. Trying to reclaim the 50 exponential moving average, the blue line, and the 50 simple moving average, the yellow line coming through the chart here. Now, what's interesting about this most recent move is obviously this kind of knee-jerk kind of reaction to these EMAs, coming down a little ways here, another 10.27. The market is still trying to figure out what's going on with the trade wars, all that kind of noise and nonsense in the space. And well, for the most part, things are starting to actually look quite positive here for Cardano, giving its most recent downturn, which we kind of spoke a little bit about in yesterday's video. So let's go ahead and bring this into a 5-minute time frame, just so that we can actually take a look at this most recent move to the downside here for ADA. You can see a very interesting kind of corrective potential move here, and then a more impulsive lead run. Okay, so let's go ahead and take a look at this one here to start with. What we're going to do is we're going to take a look at this and see we have indeed crossed the 1.618. So I suspect we have still got a little bit more to the downside to go. And this, of course, is potentially a part of something going on here as well. Let's go ahead and see whether or not this is a expanding diagonal based pattern, or whether or not this is not. It is not. So this is just corrective. So we're going to look at this through the idea of a corrective pattern overall, even though we do have this kind of breakdown happening over this side as well. Is it possible that there's something else going on? Sure. It's possible that maybe there is a nested position here, but I think it's quite minor at this point. If we bring this back up into our hourly time frame, you can really see how that kind of looks on this hourly time frame in terms of that kind of 10% move to the downside here. So it looks like we're still a little bit more to the downside to be seen. Our stochastic RSI on the 4-hour would say that. On the 1 hour, it could potentially be looking for a bounce. So interestingly, there's going to be this interesting area of support that is going to be resistance for us on the Cardano. So any kind of moves above this range is going to be quite key. That would be basically 75.13 to 76.38 cents. So anything above that could be a very, very interesting time for ADA. Now, in terms of everything that's going on here, I can see a fair value gap that sits right inside here. So I do suspect we're likely to get this one filled out, this being the 72.84 to 75.55. In fact, if I throw smart money concepts into the mix here, you can see it gets highlighted in this green area just here. There's also one set up a little bit higher. So my expectations are a little bit of a relief rally. Okay, so we come bounce up a little bit, head out towards the 50 EMA, 50 SMA, and basically take those fair value gaps out, and then move back down, filling out this area here, grab that fair value gap highlighted in green, and then come down to the previous area of support and consolidation between 67.26 to 72.10. That there would then basically look to kind of finish that off. To be more accurate on that, if we were to bounce up to find resistance on that 50 EMA as an example, we would be looking more in the mid-range between 69 and 70 cents to kind of fill out that kind of structure. After that, I then suspect a bigger move back to the upside to try to take out that dollar level once again, and then really take it from there. Now, we are in a bearish structure here on the 1 hour time frame. You have that there and there with the break of structure to kind of confirm it from a smart money concepts perspective. So we need to be mindful that we're looking for closed positions above that 200 exponential moving average to change our characters back into, or at least the structure, into a bullish one rather than a bearish one on the 1 hour time frame. Okay, but all in all, it is looking quite nice, and I'm not too concerned about it. So I am long on ADA. If you're in the profit pit down in the free Discord server, that is linked in the description down below, you'll know what my long positions are. I need to actually go in and update some detail there, so I'm going to go do that after I've finished recording this video, because I did make a couple of strategic moves as we were starting to see this move to the downside here, and I need to go and update that. But I'm still in all of those long positions that I put out in the profit pit, and I think it's like 5 different long positions that I'm in at the moment on crypto. So very, very good. So stochastic RSI correcting down, we look for the bounce, we'll then come back down, and then I think we're going to be good for another run to the upside. Relative strength index is likely to see a push towards the 50 and then start to see the breakdown from there. The MACD histogram, obviously we saw significant buying pressure here from this, so we saw a big break to the downside and then obviously a big break to the upside here from the histogram. Other than that, there's not a lot to kind of note on the 1 hour time frame. So it is kind of like business as usual here for ADA when it comes to the kind of small volatility. How would I be looking to trade this? I'm going to be looking for a rejection from the 50 EMA, 50 SMA, maybe look for some short positions here. Only be minor ones, tight stop losses higher than previous swing lows where possible, and try to get a 1.5 risk reward ratio or more. Other than that, I'll be looking for long positions if I wasn't already in them, and I'll be looking at that support level holding and then looking to take this up to, you know, $1.50 in the future, which will be several weeks down the line. So yeah, it's looking good. Let's roll this up into a daily. I'm not too concerned about the hourly at this stage. In fact, I'll get rid of that movement there. You can see here that we haven't closed lower than the 200-day EMA against those strong support. Yes, that move to the downside was an issue that was created from cascading liquidations. Essentially, there were insufficient a number of buy orders in the order box. Basically, all market makers basically withdrew all of their buy orders as this started to happen. And basically, there was no buying or very limited amount of buying actually happening on the spot order books, and that created, you know, basically a requirement for the price to move down lower in order to find buyers. At the same time as that happening, you had liquidations where basically long positions were being liquidated, forcing people to sell their ADA positions on those leverage positions. And essentially that means that you have more sell pressure mounting up against a very lack of buying pressure. And essentially price had to go down and find the buyers, which it did phenomenally well. You can take a look at the size of that wick as a clear indication that support has been found at these lower ranges. It basically just moved out and grabbed all of the fair value gaps on these smaller timeframes here. You can see it almost filled this one at the bottom, but it completely filled out this one over here as well during this moment in time. There's still a whole load of fair value gaps on the chart here. I suspect that they are going to be very interesting ones to keep an eye on, but they don't have to be filled out. It's just something that we note from time to time. Now, stochastic RSI is oversold. We will be looking for a move to the upside in the coming weeks, in my opinion. The divergence indicator is also showing that the relative strength index is in the oversold position. Typically, this is where you start to see momentum shifting back to the upside. So support at 72 cent. I do not think that we're going to see any closed positions lower than 200 EMA, but we'll keep an eye on it nonetheless. MACD histogram here shows again, really interestingly, how there is bullish divergence. Okay, so what do I mean by this? Well, we have lower lows here on the price action, but whilst you have lower lows on the price action, you have higher lows on your histogram here. This is a clear sign that we are still in bullish environment, not a bearish one, despite all of the bullshit and the noise that you hear in the space. Essentially, this is going to be looking for some pretty aggressive moves to the upside. If you're paying attention to yesterday's video, of course, we were looking to see, and you can see the accumulation here is also rallied up quite nicely. But as per yesterday's video, we are still looking for an aggressive move to the upside. With everything that's going on here, we are now targeting out 925 on the 1.618 for the wave 3 diagonal based pattern. This move to the downside can take a little while though, so we might see a little bit more volatility. Like I said, it's not ideal. If we just use ABC here, we might see something to this effect before we actually end up going into the kind of larger movements, which might be a lot more impulsive, like this, for example. Okay, this can take some time. This is not the ideal structure that I wanted to kind of map out, but it is one that we are tracking across the multiple years here from 2020 into 2025 where we are today. Everything is kind of tracking out nicely for that. A little bit of volatility, yes, and it can be a little bit alarming for many, but for the most part it is kind of in line with the crypto market's ethos of, you know, volatility is the name of the game. Now, for me personally, I am in long positions. I'm going to hold those long positions for probably as long as I'm kind of willing to, weeks, maybe months, to see how they kind of go. 925 is my initial kind of thoughts here now when it comes to ADA in terms of the diagonal based pattern, which is significantly higher than my previous $5 or 227 for that impulsive trigger point. So again, we'll keep a close eye and see how things develop over time. If you found this useful, smash the like button. If you're a new subscriber, and if you haven't done so already, check out that video right there. It's one you don't want to miss.